Estate here with Champions Real Estate Team here at Berkshire Hathaway Home Services Ambassador Real Estate Company. My name is Mark Wehner, team leader here. Every Wednesday we jump on here and give a rundown what's gone on in the real estate market over the last 7 days, and then also give you kind of a quick tip. So my quick tip today, I'll try to keep it as brief as possible. It's one of those I can dive a lot deeper into. So if you have more questions on it, I'm happy to go into more depth. So what I'm going to talk about today is basically the comparing from a financing standpoint. When someone says, well, I'm going to do an FHA loan, I'm going to do a conventional loan, what's the pros and the cons of each? There are pros, there are cons of each one. One thing I like to touch on with my clients, if they're looking at their FHA, is potentially an option for them. So everyone's, you hear FHA, you can get into a house with 3.5% down. So 3.5% down payment. That is your initial investment into that house. That money essentially going into your house savings account, basically starting to build up that equity in your house. With a conventional loan, typically you do about 5% down. So everyone's like, well, that's more money you have to put down up front. Well, that money is also going into your house savings account. So you're basically going into your equity. So you're able to put more money aside for you. The caveat here is when you take a look at comparing FHA and conventional, when you look at both of those side by side, and I highly recommend you do that. This is what we do with our buyers. One of the values we bring to the table as buyers agents at Champions Real Estate Team is we're going to go over all the different information so that you can make the best decision for you. So, FHA may be great for some people, and if they have the option, may go to conventional. But what is best for you? And that's the most important thing. So just kind of a brief overview, like I said. So with FHA, so this is an example of a house I pulled out of Arbor Gate. It's active on the market right now at $300,000. So let's just use this example, $300,000, 3.5% down. So as you look here on the numbers here, you had $10,500. That basically would get you your loan amount of $289,500. Your base loan amount. But with FHA, you will see down here in this line item 25 here, it's FHA UFMIP. So that's upfront mortgage insurance premium. So that basically are you have to get that on the loan, which is 5,000, it's 1.75% of the loan that you're basically having to wrap back into the loan. So you have $5,066, and that's where you have up here this base loan amount at 289.5 is that 300,000 minus your down payment, but then you add this upfront mortgage insurance premium back onto the loan. So you're paying that $5,000 off over the life of the loan. So you're paying 5.5%, whatever that interest rate is, on $5,000 for your entire loan if you do not refinance that loan. So what does that mean to you? That basically means you are actually paying the government to get this little bit of lower interest rate at 5.5%. So, oh, hey, 3.5% down, less money down. I got a lower interest rate of 5.5%. My monthly payments got to be better than a conventional 5%. Well, they're almost about the same. So, and I can go into more detail if you want to on the other closing costs and things here. But what I want to show you down at the bottom. So this is at property taxes at $57.18. So I just want to make sure that the numbers are the same. About $2,000 homeowners insurance, roughly there. So looking at your monthly payment, so your monthly payment on this FHA loan is $2,540, and your cash to close is about $20,500. Okay, so now you say that's okay, $20,000, you have that, but maybe you have a little bit more that you have set aside. And let's look at a conventional loan where you're going to put more money into your pocket. So what I mean by that is, yes, you're going to have a little higher down payment at $15,000 rather than $10,500. So that's about a $5,000 difference there, correct? Well, where does that $5,000 difference come from, that FHA versus the conventional? It comes from that upfront mortgage insurance premium that you have to pay over the life of your loan for an FHA loan, which was about $5,066. So you're paying the government an additional $5,000 to get that little bit lower interest rate and to come to the table with with less money down. But if you're doing a conventional loan, you're going to put more money into your pocket at the when you're at your closing, essentially. So this interest rate is at 6.25. So that's about where we're at today, 6.25 to 6.5 to 6%. So I kind of figured right in the middle. Taxes are the same, insurance is the same. But what I want to show you here is, so yes, you're bringing $25,000 to the table at closing, but you're also putting $5,000 of that more into your house savings account. Your equity is what I'm getting at here. So now if you have that extra money to put aside, then great. my advice would probably be, look at all the options. This may be a better option than FHA, even though you have a lower interest rate. But the funny thing is your monthly payment is 25.40. So on your FHA, it was 25.20. So for $20 more a month, you're going to put an extra $5,000 in your pocket that you're not paying 5% on for that life of that loan, where that $5,000 upfront mortgage insurance premium is going to cost you more in the long run if you were to keep that loan the entire life of the loan of that 30 years. So, you hear, people on social media, hey, you can get into an FHA loan, 3.5% down, your interest rate's lower, it's all, sunshine and rainbows, but really is it? Look at the numbers, look at the cost sheets, and see what makes sense for you. Now, I've had clients, that, hey, we got to buy new furniture. Maybe the, first-time home buyers, they got to buy furniture, they got to buy things for the house, they got to buy a lawnmower, all those things. So maybe, yes, okay, well, let's do that $20,000. Let's do an FHA. You're coming to the table with, less money out of pocket, and that makes sense for them. But if you're like, hey, I want to put more money in my pocket, I maybe save up a little bit more, get to that, get an extra $5,000. I'm not going to have to pay over that life of the loan. So that's kind of my quick tip. I know there's a lot more to dive into on these cost sheets, but I just wanted to give you a brief overview. So if you are looking in that, if you're considering an FHA loan, that is something really to consider. And if you're not working with a lender that's going to sit down and go over that in detail, give you the pros and the cons in that and the benefits of an FHA versus a conventional loan, maybe talk with a different lender or come see us here at Champions Real Estate Team. We're happy to go over that information with you. And that's our goal, is to coach you, educate you so that you can sit down and go, does FHA make sense? Does conventional make sense? What's the best, the best of both worlds? How can you work that together? Some lenders out there have conventional plans based on income, and you maybe get a little bit down, more like a 1% conventional loan. So it all depends. There's many different products out there, but that's just one of the brief overviews. When I don't want people to think that just because FHA's got a 3.5% down, that's better, because you get into the house, with less money down, but it may cost you more in the end. You're not putting more into your equity, your initial investment into that house. So that's just one thing I like to talk about here. So reach out to me. Happy to go over any of that information with you. But let's jump into what's gone on in the real estate market over the last 7 days. So as we see here, as this pulled up for you, so we had 514 homes. This graph here is almost exactly the same as last week's. We're off by about a couple numbers here. So 514 on the new listings, new contracts, 373 and 356 happy new homeowners here. So market's, steady, hasn't done anything crazy over the last week. Still good time to buy and sell. Interest rates have come down. They've been kind of flat over the last week. Talking to Russ Williams, what is it, the personal consumption expenditures? Yeah. So the Fed's, the data that comes out on Friday is a personal consumption expenditures report. That's going to probably give us more direction on what the Feds and what the rates are going to do over the next couple of weeks. So we'll probably have more on that next week when we do our video, and maybe Russ Williams will be able to jump on and kind of give more explanation on that side. So he is a fantastic resource for any of those financing needs and the numbers and all that kind of good stuff. So he can explain that conventional FHA maybe a little better than I can, but that just brief overview. So housing market is still, pretty active with regards to that. Let's look at a 30,000 foot view here. Just a second to pull it up here. So like I said, this graph didn't change much at all. So I think we were at 3443 last week. So we went up 5 houses, 1,900 homes on the market, just under 989 existing homes in the Douglas-Sarpy County area. New construction down a little bit. Months of inventory dropped just a little bit. And our average sold price stayed the same from last week. So, but when you take a look at that, 513 came on the market, 373 went off the market. Even if I just showed you this graph every week, you'd be like, well, nothing's moving. We keep 1,900 homes on the market, but that previous graph shows that we had 513 come new, and then we had, 373 come off the market. So there's still things moving. This is that 30,000 foot view of the market here. So, but yeah, so it's, market's doing really well in regards to that. Interest rates are coming down a little bit. So we're about that, I think it's 6%, right around there. So yeah, if you have questions, comments, happy to help you. My number's right down here, 672-7670. Go over any of that kind of stuff. If you're thinking about buying, I know this is kind of that time of year where people are like, well, maybe we should buy a house next spring. Maybe in the fall, maybe a better time because there's less buyers. People don't want to move during the holidays, all that kind of fun stuff. But yeah, we're happy to get a game plan together for you so that you know exactly what you're doing. If you are going to wait till spring or, get out there when everybody else does, and how we can, our goal here, is to provide that value to you as a buyer, and ultimately as a seller as well. But give us a holler, and happy to chat with you, and have a great rest of the week, and have a good Labor Day weekend, and take care, be safe, and see you.